Hello, investors. Thank you so much for joining me. My name is Michael from Deep Value Returns and Seeking Alpha. Today, I want to talk about Airbnb. So, Airbnb has some positives and negative aspects that I want to discuss with you. So, I'm going to talk about its poor visibility, and that's one of the things that kind of puts me off from this investment right here. Then, I'm going to talk about one of the things that really excites me about Airbnb, which is its ability to bring in very strong free cash flow. Then we're going to talk about its valuation and how I kind of feel about that. So I'm going to just get started. One of the things I wanted to highlight right away is that in the past 3 months, right, a lot of the tech stocks have really sold off. However, Airbnb has really growing quite flat. You can see here, it went up, went down, but pretty much it's been quite flat compared to pretty much everything else. Particularly names that are not as well known have really just taken a huge hit, irrespective of them being high quality businesses or not. And in tech right now, I've seen a lot of this happening is that if people kind of know the name, they kind of feel that they have more conviction there. But if people are less familiar with the names, they've really just sold off a lot of the opportunities. Um, the other thing that I wanted to highlight is this, right? So it's really, really difficult to have a good sense of what its revenue growth rates are going to be like in 2022. So the revenue growth is really, really bumpy. Here's some context, right? So for Q2 21, they were up pretty much 4 times relative to the same period a year ago. So they had the easy comp with last year's Q2 where it was negative 72%. So with that in mind, they had this really strong revenue growth rate in Q2 21 where the revenues were up meaningfully. You can see there was pretty much nearly 4 times, up nearly 4 times. Now, the problem is that as we come into 2022, we're going to start to comp these positive aspects. So I'm not just talking necessarily about how 2022 is going to compare with Q2 2022 versus Q2 2021. It's really more about what the sustainable revenue growth rates are going to be for the year as a whole. It's kind of difficult because if the stock is growing, let's say at 40, if the company is growing at approximately, let's say 40%, it's a high flying name, people are going to give it plenty of wiggle room. If it's kind of slightly more muted and coming at a more respectable, let's say 30% compounded annual growth rate, it's a different multiple that investors are going to attach to the stock. On the other hand, if it ends up being a bit closer to what analysts expect, which is kind of, let's say, around mid 20s, again, that's going to be a different multiple that investors are going to attach to the stock. And it's going to have dramatic implications on what new investors to the stock, are going to be paying for the stock here. Now, here's the one thing that I wanted to move to highlight. So Airbnb is doing something quite intelligent. They're trying to move the business away from what is something that is quite notoriously cyclical, and that is the travel industry has kind of strong peaks in certain periods, but it's very, very much kind of bumpy. And if you haven't got a strong, for whatever reason, the weather's off or whatever, you haven't got a strong period in let's say in the summer, it's going to cause some bumpiness and investors are not going to want that. So to remove some of that bumpiness, they're really investing very aggressively on two things, which is one is people moving into properties for longer period of times, and another one is moving into more rural destinations. Now, when everything is said and done, if you look at the idea here, so idea being that long stays, something that's close to, let's say, 30 days, it's only accounts for 20% of the gross nights booked in Q3. So although they've put a lot of energy in discussing that, if you think about it, at 20% of the gross night booked, I mean, it's not going to be a needle moving pieces for some time. And the other thing that they discuss, people looking to go beyond just the high density urban areas, and they're moving to more rural location. Travelers are moving to more rural locations. Now, with that in mind, the margins that Airbnb are going to get from those lower quality properties, because people, they'll have to have some incentive to go and move to travel to a rural location, the margins are going to be tighter. So with that in mind, it's going to be another thing that is not going to be that interesting as well for investors, those kind of, let's say, side opportunities. Now, one of the things that I really, really like here about MBV is that The way it works is that it gets cash up front when people book on the site, but they only disperse that cash to the the host once the traveler actually checks in. So it gets cash up front and then it disperses it later. And that has meaningful implication on its free cash flow profile. So you can see here that for the trailing 9 months of 2021, the free cash flow margins have oscillated between 35 to 40% free cash flow margin. So that's something that's really, really attractive. You know, it's an asset-light business model, but is it really worthwhile paying more than 100 billion market cap for Airbnb for something that kind of has around a billion of free cash flow? It's not going to be growing that fast, as we've already discussed several times. You know, it's a business that's kind of volatile, and with Omicron on the background as well, it's going to be kind of difficult to see that strong, sustainable growth. So, with that in mind, I'm not really sure if it's worthwhile getting involved here. So, the stock, I remarked last time, my last article in October, that paying approximately 14 times next year's revenues was probably fairly valued already. Right now, the stock is kind of just slightly nudged higher, so it's priced at 15 times this year's revenue growth rates. Now, with that in mind, yeah, it is a well-known marketplace, but as I discussed at the introduction, there's so many high-quality names out there with ample visibility being priced at like less than 15 times forward sales, and sometimes even less than 10 times forward sales. Why would someone really want to get involved here? So just to make it clear, I'm not talking about someone that's already kind of bought into the stock, bought into the idea, they're highly entrenched. I'm talking about the kind of the new, uncommitted, without bias, unentrenched, and not in love with the stock, a new investor. Would they really want to commit fresh capital and pay 15 times forward sales for Airbnb? When there are so many high quality names that are being priced meaningfully cheaper than that. So I'm not really sure if it's worthwhile. In any case, if you want to find out what kind of names I'm looking at right now that I find particularly compelling and that are really, really cheaply valued with ample visibility, don't forget to check out our marketplace. It's right there on the screen at Deep Value Returns. And yeah, I hope to see you soon. And thank you so much for checking me out and have a great 2022.